All right, guys, so let's discuss about the hot trendy topics regarding how to read the liquidity heat maps and order blocks, footprints, and all of that. Let me tell you, every cycle, the market changes its language, and suddenly everyone starts repeating the same buzzwords like they discovered some secret formula. Now, everywhere I look, people are obsessed with the order flows, heat maps, volume deltas, liquidations, order books, smart money footprints. And recently, I've been getting a lot of DMs as well from my students as well who learn from me, like teaches this, like how do we read that? What tools do smart institutions or institutions, central banks use? So but let me tell you something most people are not ready to hear. Years ago, when nobody in crypto, nobody even talked about these things, I was already discussing market correlations, like liquidity relations, capital flows, cycle behaviors, BTC correlation with the different assets. People laughed at it. They thought it was totally nonsense, bullshit. When I talked about how money rotates between sectors, between different financial market sectors, how Bitcoin reacts in cycles, how market distributes the liquidity, nobody cared. But now, like after Bitcoin topped around 126,000, when I was giving the correlation charts, and after 126,000, BTC corrected heavily, and suddenly everyone became, macro analyst at 60,000. Now they are comparing BTC with S&P, they are comparing it with gold, they are comparing it with DXY. Now they see so many correlations. You also can see so many correlation charts nowadays. You need to understand this, that the market always does this. First they mock you, then they copy, then they sell it as mastery. But here's the dangerous part you cannot miss. Most people today are learning tools before learning the markets. And that is exactly why the majority will never survive long term in this game. You really think institutions who are managing billions of dollars of funds are leaving magical footprints on free websites for everyone to see? You think a guy with a $50 account and a hedge fund moving hundreds of millions are both looking at the same glowing heat map or the same data? No, come on. Central banks pays and institutions, they pay insane amounts for exclusive data. Institutions spend millions of dollars monthly for these information advantages. The real execution models are not sitting publicly waiting for retail traders to decode them with a free indicator. What retailers usually sees, they sees was what they are allowed to see, and that's a trap. People became dependent on tools instead of understanding market behavior of the markets or the market cycles. What happens the day the indicator fails? The data lags. The website, is down. The heat map gets invalidated. The market conditions changes. Most traders collapse instantly because they never learn how to read actually the price action, the right price action and the right structures, market structures. But do you know what has survived every single generation since the financial markets are exist in this world? I'll tell you, like it's market structure, price action, market cycles, rotation of money, momentum, human psychology, accumulation, distribution. I mean, basics. That's it. The real edge is not in overcomplicating your charts. The real edge is in understanding how markets move without needing 20 confirmations. Smart money does not need, they does not need flashy signals to understand liquidity. The chart itself tells you the real story. If you have the basics strong, if you know me from the beginning, you know how I works, right? The price tells you where the liquidity sits. Momentum tells you when to enter into the market. Structure tells you when the market is weak. Cycle tells you when the greed and fear are peaking. But people ignore all of this because they want shortcuts, and market punishes shortcuts harder than anything else. I've said this before and I'll say it again. They will always show you what they want you to see. They'll make you believe the breakout is real. They'll make you trust the indicator. They'll make you feel this time it's different. And once enough people start believing it, that's when the real move happens. The move that most people never see coming. And that would be the end. Thank you.